Hello traders, welcome to the Trading Fanatic channel. In this video, I'm gonna show you all the trades that I took this week, wins, losses with MT4 stats. I made around 6.5 risk to reward and it was an extremely tricky week. This one, it was much better than the last one. I'm coming from 2 weeks of inactivity, right, of break-even trading, and pretty much the last week I didn't take any trades, but this week was pretty active. We had some great setups across all markets, I believe. Within my community, we mainly trade EURUSD, US30 and Aussie dollar, and there were setups on all of those instruments. So the aim of this video is to pretty much show you my performance, have a look at the trades I took, and yeah, pretty much you can look carefully into the details that I mentioned and try to steal something for your trading plan. Right? And hopefully you're gonna learn something. If you have any questions regarding anything I do, something that you want to know, or anything or any videos that you want me to do in the future, make sure to comment. All right, comment below. I want to hear from you. I want to hear what you want to learn and all of that great stuff. So let me know. And yeah, without further ado, let's actually head into it because we have a lot to cover. Alright, as you know, I'm gonna be breaking down EURUSD because this is currently the only pair that I'm trading. I always believe in the quote of less is more. The less you trade, the more focus you get actually into the pair, the more you know how it moves, and the better you get at trading that instrument, right? As a beginner, I started with trading all the currency pairs, like 30 or 50, however they are. And the more I got into the game, the more I reduced all of those pairs. And right now I just came at one, right? There was a time I was trading 3, so EURUSD, GBP USD and Aussie USD, right? But right now I decided to fully specialize on EURUSD. We're also trading US30 right now in the community. By the way, it's Black Friday today. I'm recording this on the Black Friday, so I'm also running a sale. So if you want to join the Fanatics and really take your trading to the next level, we are adding some new stuff right now. We're going to be doing live trading sessions as well. And also we're going to be adding a fundamentals episode, touching a little bit of the macroeconomics and all of this sort of stuff by an experienced trader in this area. The code is Black Friday 20, and I'm probably not going to do such a sale pretty soon. And I'm also going to be increasing the prices due to all the value that we're adding. So if you're considering to join the Fanatics, right now it's the best time to do so, right? So just to start a little bit so I'm going to be covering Monday, Tuesday, Wednesday, and Friday today. So I would love to give you first a little bit of top-down analysis in terms of the 40 time frame. So a little bit of discussion right here. This was a high to me. This was a low. Then we made a higher high right there. And here we actually broke with a wick. So I got a question because in the free course that you have covered, I said there that I love to see body closes. Okay, so if this is not broken by a body close, it is not considered a break. Okay, but then we'll ask you the question, well, why did the price wick so much lower and this is not a break? Because right now, if I go on the hourly time frame, there is gonna be a body close, right? So to me, if I actually think about it logically, if this is a strong price level, the market should not go below it. And even if it wicks it by a little bit, sometimes on the 1 minute or on the 15 minute, it can wick a level by 1 pipette. It's not even 1 pip. 1 pipette is like, it's like this. It's very, very, very little, right? I still consider it invalidated because again, this low is no longer protected. It was wicked below, and then I actually mark it as a breakout structure. Then of course we ask the question, what caused the breakout structure? It was this. The market pulls back, lower high, then consolidated for a bit, and then we went on and created a new lower low, which formed then this breakout structure. This is pretty much where Monday opened. We had a very nice trending Asian range and the market opened right there. It pushed and created a lower low. And this is where I made kind of the biggest mistake that I made this week is not to trade on Monday, right? Because we had this beautiful expansion lower, then we had a little pullback for a lower high, and then we had another push into the downside. So we had 2 beautiful short trades on Monday. Then of course, this turned into my major lower high and I was actually short biased. Right up until we broke right there. Then Thursday we didn't have much activity, and Friday today we managed to capitalize with the community on this short trade right there. It was a beautiful short trade, but we took 5R and it ran for more than 10. So we're gonna have a look at that. Okay, so yeah, this is pretty much a little bit of a full hourly outlook. You can see that there is not a lot of action. The market moved down, then it moved up, and right now it's pulling back. So pretty much the weekly cycle Like, where did it start? It started from there, it went down, it went up, and right now it's pulling back. So we can already see how the weekly candle is going to look like, right? It threw a wick to the downside, pushed up, and right now it's throwing a wick to the upside as well, right? Have a look. Threw a wick down, pushed up, and right now it's throwing a wick to the downside as well, right? And closing bullish. So this is the skill of actually reading the higher time frame candles on the lower time frames. Okay, so right now I'm going to be giving you an insight into how I trade on the lower time frames and how I pretty much intraday trade, right? So let's actually remove some price action right there so that we see it clearly. So there is Monday. Okay, so Monday, a very trending Asian range, and if you haven't watched my Asian range video, make sure to do so. Right, it's very important. You're gonna get a lot of insights from there. So in this case, when we have a trending Asian range, right, usually what the market will do, it's gonna pull back into the Asian range and then continue. But in this occasion, the market just continued to push lower, right? Lower low, lower high, lower low, lower high, lower low, lower high, just kept going down. First of all, I wanted to short from this area, which was my major higher low supply. Unfortunately, the market did not tap and then went on and broke structure. Okay, so if you really zoom in, this is the low, we pull back, then we break it with this candle. And where I doubted for a little bit is that immediately after we closed this candle, the next one just massively went up. And I was like, okay, is this gonna work out? Because we were coming from 2 weeks of inactivity of EURUSD disrespecting every level. And myself and also some community members, we were pretty skeptical about this. But this was an absolutely valid trade. Right there, lower low, lower high. You can see here it failed to break above, so that is perfect. The level maintained, so why don't you strike? And this trade actually turned into a very nice risk reward at the end as well. So a lot of RR that I missed on Monday. Then simply we have a new break of structure right there, a new push. The market entered into this very complex correction. It tapped at first time, responded, but then came in for the real liquidity gap, right? Gave the setup as you're going to see on the 1 minute, and then provided us with a 25 pip move for another 5R, right? So this is just a 15-minute breakdown. And there is the setup. So again, I am not sharing absolutely everything we do. Like, we have a whole system, a whole series of events, the Fanatic way system, where we actually know how to enter the market in a very systematic way without thinking, right? But pretty much I'm giving you a hint. We always wait for all timeframes to align. Right, so if the 4 hourly is bearish, if the 15-minute is bearish, if the 1 minute also turns bearish from a 15-minute zone, and we have all the confidences that we need, because it's not only a bearish shift, right, then we can enter the trade. So here we have a trend change, the market pulls back, it gives us a good stop loss, right? If you wish to draw a zone, well, this is pretty much your zone right there, right? You can enter from here, you can enter from there if you wish. It depends on your stop loss. Me personally, I like to work with stop losses below 5 pips, because again, I'm giving you hints. EU is usually, if it goes, it's always gonna give you 20 to 25 pips of move. Sometimes it does much more. As you can see here, it actually gave us a a 40 pip move down, right? But usually 1 to 5 with a 5 pip stop loss and a 25 pip target is a very good golden mean. Okay, so then we pull back right there, and some people could have taken a loss right here. And again, this would be a valid loss. We actually backtested with the team. We also host weekly webinars where we cover every single little detail in the market and try to improve. So that right there would have been a valid setup. This is a trap right there, and there is a reason that people enter from zones like this and they get stop loss, right? First of all, this is not the right level to enter from, and second of all, your stop loss is not protected, right? You always want to place your stop loss where you're going to be 100% wrong. Because imagine you place your stop loss right there, and then you get stop loss stopped out right there, and then the market actually went to hit TP, right? Then you're like, well, I placed my position right there with a 1 pip stop loss, I got stop loss, and then the market went to TP. So don't be greedy, okay? But this one would have been a break-even trade or maybe a stop loss, but then we actually came in deep into the zone, and we aligned the 1 minute right there. This is our 1 minute alignment. And then once again, this is the big confusion, which I can potentially solve for you, right? You would like to enter from there, you would like to enter from there, from there, from there, or from there. Where do you enter from? Well, in fact, it's pretty easy, right? The question you gotta ask yourself is, how can I place my stop loss safely? And not a lot of traders ask this question. What they're focused on is getting a trade like this, right? And having a 1 pip stop loss or something like this, right? And again, I'm gonna tell you long-term, this does not work. So again, you can see I trade on the pullback, taking the trade right there, stop loss above 5 pips, and go for a 25 pip profit. Okay, So this is Monday. I just wanted to share those two beautiful trades that I did not take. This one I was on the charts, but I did not take this one. I was not on the charts. For 30, I was not on the charts, unfortunately. So I did not trade on Monday, which is very, very, very unfortunate. But let's have a look what happens on Tuesday, right? So I'm going to have to play some candles and get some more price. There we go. That seems enough. So Tuesday was great. Okay, so it provided some sort of setups right there. So let's have a look. So we make a new lower low right there, and then the market goes and creates the first 15-minute trend change. When you have the first 15-minute trend change, when the market is making a new 4-hourly lower low, you potentially know that the pullback phase is initiating, because let's zoom out. This is our major 4-hourly high. No, I want to mark it with the highlighter. Major 4-hourly high, major 4-hourly low, right? And then what happens in between is this structure, right? This is minor structure. We can trade this, right? And then the market shifts bullish, and then we start trading the pullback, right? And then when the market taps in right there, aligns down, then we start trading the push towards the low, right? But in this case, this week, it did not happen because we continued and we broke structure above. So if we zoom in right here, there were 3 longs in total, but unfortunately, none of those longs actually ticked my rules. Unfortunately, I had a community member that took the last one, which was slightly bit better, but again, not according to all the rules that we have. So you can see here, push, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? It just kept going higher and higher and higher. Very nice move to catch. If you're also trading, again, I'm going to be working on a swing trading strategy pretty soon, because if you just took the first one with a nice 7 pip stop loss, there is your 4R. Because if you have a stop loss above 5 pips, then you would like to go for a 4R, right? Again, sharing gems. Here, when we reach this high, we actually aligned the 50-minute to bearish. And guess what? Remember, what is the 4-hourly time frame doing? It's bearish, right? So if the 50-minute goes bearish, then of course, I would like to take shorts and go with the higher time frame trend. Right? So then we push, we pull back, given the setup, beautiful 5R right there. And as you can see, if I just remove this FIP, we broke structure right there again. So I immediately draw my new zone, my new supply lower high, and I took another short right there, which was a loss. Unfortunately, then we created a trend change to the upside, the market pulled back, but I wasn't trading right there, 7:30, 5:30, I'm not trading at that time. And then we had a lovely long. Again, I had community members that trade a little bit more than they're supposed to, and they actually took that long trade. But once again, at the end of the day, it's all about persistence. If you persist in the markets, if you keep showing up, if you strike every single day or in every single setup that you see with consistent risk, that according to me is the formula. So here, I'm not going to go into great details because I just didn't get any trades. I can go ahead and explain why, but I'm not going to do this, right? Because I didn't take any trades. Maybe if I took a loss, I would explain, but not really. So yeah, pretty much here we push, then we pull back there. If you actually carefully look at it, the 1 minute did not align. The 1 minute aligned right there in order to take a long trade, right? You can take it aggressively from here and place a stop loss below, which is, you can see 5 pips. And then of course, what do you do? You want to go for a 25, but unfortunately this time you kind of got missed. Okay. Here you got a fake one. Why is this a fake? Well, I'm not going to tell you. You go figure it out. Why is this a fake? And why did the market later come back to take the stop loss of people that rushed into longs, right? Have a look at the psychology of the candles as well. The market taps into this demand, people enter longs. Taps into demand, people enter longs. It gives you an internal alignment right there. It pulls back. Look at the bullish candle right there. People enter longs, and all of them get stop loss. And why is that? Well, because there was no liquidity grab before this occurred. Before this trend change occurred, I mean, right? So go try to explore. Why didn't this trade right there work out? Then there is the break, there is the retest. We had my liquidity grabs, we have all the rules. The market just chop, aligned bearish right there, right? And on the retest, I took the trade. My first trade for the week was this one. I took my first trade from there. Stop loss, I always give a little bit of breathing room as well. So I don't set it precisely like this. I always try to give a little bit of breathing room, right? And as you can see, it gave me some nice reactions, but then all of a sudden it just massively rushed into the highs. And I thought, okay, we're going to get a stop loss. But then still, I'm going to be looking to re-enter from this zone, right? But fortunately for me, it held and it just straight went to just textbook 5R, right? So beautiful. 5R right there. Then the market tapped inside and gave us a trend change, but once again, similar to this example, it was a fake. Why? Well, same pattern, right? Go compare this leg, right? I'm gonna give you a hint. Look at all of this push and look at all of this push right there. They kind of look the same, right? So as the market pulls back, has it grabbed any liquidity? Not yet, right? And then we actually came in, we grabbed the liquidity, went in a little bit deeper, and once again, higher high, this candle broke the higher low. So on the retest, I entered, and this way, on this trade, I didn't place a stop loss I should have, like 2 pips like this. I decided to just, because I got a very nice entry, I just decided to keep it safe above the major 50-minute high, just in case maybe it comes in for another one and then it shifts again. So I decided to be safe, so 3.7 pip stop loss. And yeah, it gave a reaction. It actually broke structure right there. And I thought, okay, it's moving good, but then just boop, stop loss, right? But of course, 4R for the day, very, very, very happy. So that is my Tuesday. And then once again, there is a long right here, which my community members took. It was from there with a very nice stop loss and a very nice 5R, but not only 5R, it went for quite a bit, right? So very nice long trade right there. So that is pretty much Tuesday. Very nice, very, very nice and profitable day. And Wednesday was the nightmare of the Fanatics because we were live, trading that price action live, and all of us just got smacked collectively, right? The banks took our stop losses very nicely. So remember that the 4-hourly time frame was bearish, right? We have this beautiful push, we have this beautiful pullback, and the market just tapped into our 4-hourly supply zone. So what, as I said in the beginning of the analysis, what do I want to see is I want to see the 50-minute to align with the 4-hourly, right? So there it is. Higher low, higher high, higher low, higher high, trend change right there. I was even looking to take a short from here, but it wasn't provided. Okay, if you wish to be more conservative, again, we have 2 sets of rules for our structure. I'm not going to go into those. I'm going to be working on an indicator as well, so that you spend even less time to identify correct and incorrect structure and major and minor. This could also be a trend change, right? If you want to be a little bit more conservative, but it was either this or that. There we shifted bearish. Then I was looking for the market to come inside this zone, but unfortunately it just pulled back. It pinked our 50%. And then it went on and made a new lower low. So then, of course, we adapt and we wait for the new major lower high supply. Major high, major low, the market pulls back, and we took 3 losses in a row in this area, which usually my plan says you're not gonna strike after the second loss from the same supply or demand. But this time it looked good. We were also live and we were pumped and we took all the trades. So pretty much the market comes in, grabs the liquidity, creates a higher high, higher low, higher high, trend change, very nice momentous move. On the retest, I took the trade. Again, I don't try to be perfect, right? I just want to have a nice stop loss that is below 5 pips. So in this case, I could have entered from there with 2. Sometimes it's going to give you a 5 and it's going to go. Sometimes it's going to come all the way for 2. You never know. So when I press the button and where I get filled, I don't care. Came in, responded, chopped for a bit, and it actually took out my stop loss right there. So I can see on the trading view, it didn't take it, but on my live account, it took it out, right? Okay, cool. Stop loss. Let's look again. Higher high, higher low. It tried to respond, it failed, and then it flipped and created another trend change. Then I was like, okay, yep, I'm gonna go with it again. This was a stop loss. I got liquidity grabbed, so let's hope that it's not gonna happen again. The market pulls back into the zone once again. This time I got a much better stop loss and much better fill as well, 2.6 pip stop loss. But the market just went through my stop loss like it was nothing, right? So this is the second loss, and then okay, cool. Well, let's see. It got very momentous to the upside, but it still failed to break above. And then we had this very nice push. And by that time also, the DXY, I cannot go to the DXY right now and try to find this precise point. The DXY also just grabbed liquidity and also just provided the TC. While the DXY in these areas right there was just chopping around and gathering the liquidity. So I thought, okay, well, it's worth one more try. The market pushed, but then the stop loss was a bit big. So again, I waited, and it was right there. It was very painful 3 minutes with everyone, just waiting for the market to get us a good entry. And as soon as it started pushing up, I took it. Again, you can see 4.8 pips, just to make sure it's below 5. And yeah, it gave a little reaction and just boop, boop, stop loss. Right, so that is a pretty bad day. 3 losses in a row, and of course I called it a day. You could have looked for some longs right there. I did not really look into it because it got very messy. You can see how messy it is. Then took it out, took it up, then pull back again. And some of my guys took longs from here. But this is 6 o'clock for me. I don't trade at 6 o'clock. And I have been spotting this pattern that Euro USD moves a little bit late in the day. So maybe I have to start considering trading a little bit later. But once again, I'm all about quality and trading as less as possible, right? Because the more I trade, the more I realize that I want more freedom. So I want to have more freedom to spend time on my own, doing the things I love, maybe creating more content and all of that stuff. But if you really get messed up to trade every single day, every single time, every single session, every single pair, you're not going to be profitable long term. So always think in terms of less is more. So now today, by the way, Thursday, I'm not going to break down Thursday because there was nothing on Thursday, right? The Asian range here is shifted down, pull back, push down, right? So maybe short, but it TC'd up. No, there was a short right there that we could have taken, but I don't think there was an entry. So I'm not going to be breaking it down. So there was nothing on Thursday. I didn't trade. Today is interesting. So you can refine this one to this wick, right? It's very good. And then you can say that this right there is liquidity and also this right there is liquidity as well. Why? But we can go and explore on a lower time frame, on the 15-minute. We came in, and of course, as I told you, what happens when we make a new high? Well, we potentially initiate for a new higher low. When do you know that the higher high is formed? When you have a 15-minute alignment. There is the break of the high, there is the break of the low. That happened on Thursday, and I was looking to be, I think I was looking to short this thing this week, but it was on Thursday, but it was very choppy, right? This was a short, then we pushed, then to me this one was a bullish shift, so I didn't take this short. Then it shifted bearish right there. That was also short. There were some setups, but I didn't take anything. Okay, but to me, after I saw this, I thought that we can potentially start going down. Okay, and this morning on Friday, it was a little bit tricky. Why? Because there we broke the low, there we broke the high, we were bullish, then we broke the high again, right? Well, technically we can take it like this. And the market chopped in this range for quite a while, right? I had members taking longs from right there, but I didn't take any longs because there was this long that I wanted to take, but that was at 8:15. Very early, and I missed it. I was actually doing my analysis for the team at that time. Then it rejected, it came back, then it pushed up, and I wanted to see a break above here in order to confirm a higher high, then to go long like this, but it did not happen. So fortunately, I did not take any longs right there. I think my team got break evens on this one. Then we TC down, and then I say, yes, I want to go short. Where is my lower high? It's right there. Set alert, wait, the market pulls back. All the rules were ticked, right? Very nice setup right there. It just took out the high, then it went on, took out the low. There is our zone, and I took my entry from here. Stop loss was above. I'm not sure what kind of stop loss I got or something, or maybe I took it, I think it was 3.6 or I'm not really sure. Yeah, I'm gonna share the stats, but I'm not really sure. But once again, I took 5R was somewhere right there. So there is my trade for today. I took a little bit of partial right here. I took some partials right there because we aligned bullish on the 1 minute. Then I thought, okay, maybe the market is going to start pulling back right now. And I really didn't want to suffer a pullback. And I thought, okay, let me just take the partial so I can recover my losses and a little bit more from Wednesday. I did that. And then, of course, it just went on and hit 5R. And then I think actually my final trade was, well, don't I have a Friday? Okay, I just broke down. Okay, so there is my trade. Okay, there is my, according to the MT4. So I actually had a 3.9 pip stop loss because I didn't catch it like this. You can see if I caught it like this, man, it would have been great. But I got it like that right there. So again, I just ensured to get an entry. I'm not greedy anymore. I used to be very greedy. Tap inside. And yeah, so then I took my partials right there. And then my final TP was at 5.6 actually. And then look at that. It actually went quite nicely to the downside for around 16R. But again, I don't care. I took my 5.6R with, of course, a partials right there. So I got very happy, and we called it a Friday. So pretty much those are my trades for this week. You can see it's very simple. One pair. The only regret I have is not trading on Monday, because if I took that 10R on Monday, it would have been much better with the losses on Wednesday as well, and with this finisher right there. But again, we shouldn't really think about the past. All we should think about is just extracting the lesson, right? And once again, my biggest lesson for this week is it doesn't matter what day it is, it doesn't matter what time it is, it doesn't matter what pair it is. If the rules are there, if your setup is there, if your trading plan is stick, you have to take the trade, right? So yes, it's Monday, yes, it's this, yes, it's Frankfurt Open, yes, it's London Open, yes, it's the dead hour, it's this and that. Don't try to find excuses. Just keep trading your plan systematically, religiously, and that's the success formula, okay? Fanatics, I hope you enjoyed it. If you did, hit the like button, comment below, and make sure to get use of the Black Friday discount. Link will be down in the description. And I can't wait to talk to you tomorrow on Saturday. So have an amazing weekend and chat with you soon.